What's up, Mortgage Coach community? I am like on fire today. I think this is my fourth podcast. Usually I try to do like one every other day. And it's just been one of those days where I've had just one amazing leader after another on the Mortgage Coach YouTube channel. And it looks like we're capping it off with Clayton Collins. What's up, Clayton?
Man, I'm glad to be the capstone, and good for you for doing multiple pieces of content in one day. You may see her during this conversation, but my 6-year-old daughter is sitting about 10 feet in front of me. And I think she is either really impressed with what work is for dad or really confused about why I'm talking to a computer screen for 6 hours straight. But I've also been creating a lot of content today.
Yeah, she's probably both. So I know you and I have been trying to catch up for a while now, but it's just it's a crazy time in our industry, but it's a very exciting time. And I think as entrepreneurs, and I think you're wired the same way I am, that hey, when there's a storm out there, there's lots of opportunities out there. And so I want to try to narrow this conversation. I'm sure we'll talk about more than three, but I want to come out of it with what you and I think are three of the biggest opportunities in the market. Cool with that?
Absolutely. Yeah. We can unpack some stuff, and finding opportunities sometimes mean talking about the tough situations that the folks that understand them know how to navigate.
Yeah, and I'm going to try to make this valuable. So if you're an executive watching this, it will be actionable and valuable. If you're a loan officer watching this, it's going to be very actionable and valuable for you. So really pay attention. If you don't know who Clayton is, the way I'd like to put it is he's a media entrepreneur, and he's a media entrepreneur dedicated at making paid media valuable in housing. So whether you're a company in housing, that means real estate, mortgage, title, you name it, anybody that supports the housing industry, he's making it valuable. And then he's positive media, it's about how can media be valuable to industries, to vendors, to companies. And so kudos to you, brother. You do a great job.
I appreciate it. And thanks for the introduction. You've given me the opportunity to join the mortgage coach community before, and I've had the chance to share that our mission is moving markets forward. And we don't believe that we're like some pundit in the distance commentating about the industry. Like we are in this, we are in the housing industry. We're right there with the loan originators and servicers and real estate agents that read us. And we strongly believe that through accurate and timely and efficient access to information and news and content, we can support building a healthier and more sustainable housing economy that's great for entrepreneurs like us, and for originators and real estate salespeople to build businesses and create great outcomes for themselves and their families, but also support a housing economy that's great for the American homeowner, and what's arguably the largest sector in the U.S. economy, housing. We support a really important area, and I think that's a big responsibility, not just for me as a media entrepreneur or you as a technology and software entrepreneur, but everyone who's tuned in today, who's giving advice and helping homeowners and buyers and sellers and investors through decisions every single day.
Yeah. So two things. One, it's not arguably the biggest. It is the biggest. Housing is the biggest industry, and it is shelter for families. And there is a affordability crisis in America. There is a financial literacy crisis in America. And I know Clayton and I, one of the things that connects us is we think we can put a dent in that. We believe that mortgage professionals, real estate professionals, housing professionals, we don't need. Well, we do need schools to get better at providing financial literacy, but we can bring financial literacy to America. We can put a dent in the housing crisis if we're educators. And again, that's something I've dedicated my professional career to, is turning education into a sales advantage. But we're really in an interesting time in the world. And I want to get your thoughts on this, Clayton. And I know you believe this because you've recently invested in data, but being a data-driven mortgage advisor, I think was cutting edge a few years ago. It was ahead of its time. but I think we're now in an era where, there's going to be the haves and the have-nots, and the haves are leveraging data. And you've recently became, I like to call it a data, and you probably wouldn't say it like this, but I'm going to say a data-driven media company. But what are your thoughts on that?
Yeah. So I'll start with data-driven media company thing. So like, I mean, the strategy that we've always believed in and executing toward is media plus data, and the value that having access to proprietary and partner and licensed data and information brings to our audience via our newsroom. And like, this isn't new for us, right? Like, we've been leaning on working with partners across the industry, the big title companies and loan origination platforms and servicers who have access to an incredible amount of information because of the volume that they see, as well as the trade organizations like MBA and NAR and Alta, to access information that brings value to the readers. So like, this is nothing new for us. We've been working with industry data and reporting on it for quite a while. But bringing Altos and Mike Simonson into our organization definitely propels us forward and gives us increased incentive to invest in building out great data journalists and great digital experiences to deliver information and give our users access to more timely information. Just like reporting on data is nothing new to us. Like, leveraging data in the sales and advice process for loan originators and real estate agents is nothing new. But what's changing is the timeliness and the accessibility of that information. And if I had the fortune, so one of our senior advisors is Steve Murray, who founded Real Trends. And our COO Diego and I had a call with Steve a few weeks ago, and we're like, hey, we got to leverage our senior advisor here. And Steve, walk us through like 40 years of history of MLSs. I want to know everything about MLSs. And like, he talked about like the early, like the paper version, like when MLS was like distributing all the listings inside of their market in a book format. And like, that's only 40 years ago. And like, that's like a reminder to like that was data, right? Like, it wasn't just the listings in there. There was also like aggregated information about like what like good advisors, good originators, good salespeople should understand about what's happening in their zip code or inside of that MLS area. And the MLS has still played a really important role in distributing local market intelligence. And, I'm on a lot of like the emails and newsletters and a lot of zip codes in the country, that the information that the MLSs distribute to their members. And like, that information's been like delivered and used really widely. But what we're seeing right now, as data becomes bigger and more accessible and faster, is the ability for data to be used for the pulse of the market, not just like the narrative or the history of the market. And what we're able to do with Altos, which I get so excited about, is see listings information, which is like true pulse. Like, it's true pulse. It's what's happening right now. It's the houses that have been listed right now. It's the price changes and the houses that are coming off market and being delisted, the ones that are going pending, the ones that are like actually being sold, and like the real pulse. And it's just so much more timely than it used to be. And the importance of that, as we talk about in context of loan originators and real estate agents and brokers and teams, is that their clients, the home buyers, are also getting access to faster information. They're getting it from national press and mainstream news, and from their neighbor who talks about like what they think about the real estate market. And if you, as a housing professional, aren't armed with as much information or more timely information or better a better understanding of the data, then your clients are going to make assumptions that might not be right. And what I get really excited about is arming the professionals in this industry who are doing right by their clients and helping them make the right decisions with the best information. So they're not not putting in offers that are over ask or under ask, or advising people in the wrong direction.
Yeah, no, I am just so excited. And, when I interviewed Mike Simonson, your new partner from Altos Research today, it just, I kind of heard the story and I went, takeaway is Housing Wire just got more valuable as a media company. Like, you're going to be able to provide more timely more accurate, more insightful information, because you are getting that signal, constant signal, and you're able to pull insights out of it and just
Yep.
create better media. And then also you become a very large brand in mortgage and in real estate and in housing, and you're gonna make that data more valuable, more accessible, and more useful to the practitioners. And I love that, because I just believe that, like, for like, if we're gonna put a dent in financial literacy, if we're gonna put a dent in housing, and really get more proactive where we're bringing insights to consumers. It's one reason why we merged MortgageCoach with Sales Boomerang, was now that we can really identify, based off of the actual signals that are happening in a database, where is a family that is most probable to be moving up, most probable to be buying a second home, most probable to be doing a cash out refi, and all of those things, to help the consumer, help the consumer make the right financial decision so that they can achieve financial freedom. Like data is so important in that story. So let's call out, like, remember, we're talking shop, but we want to, like, have 3 big opportunities that people can come away from this with. Is it safe to say that big opportunity number 1 is data?
I had so I think we're still in this like world where data is very vague as a term. And so like I've been like making very intentional attempts to be specific when I talk about data. So like inside of our little ecosystem, I think of data in 3 categories. I think of economic data, and that is the first thing I want to talk about today, economic data. Then I think about industry data, and the difference between economic and industry is that industry is focused on the metrics that are specific to housing and mortgage, with an increased focus on the companies that operate in the ecosystem. So like when I think of industry data, I'm thinking of the top like rankings of the top performing real estate brokerages and loan origination shops, the home data that helps us better understand like who's gaining market share and purchase and who's losing it in refi or whatever, like kind of the product mix changes are, retention of MSRs, spreads and mortgage-backed securities. I think that is like the industry data bucket. And then more in context to me, and actually a lot of different business operators, is like your audience and client data. And for us, in the history of talking about data and media wasn't so much like the economic or industry, but it's audience intelligence. So you understand like who's consuming your content and how do you craft like content and product strategies around like your core client personas. And then as like the world of data management platforms has gotten significantly better, how do you customize digital experiences to match the desired outcomes and content consumption of that audience? So like a lot of people like would never know this if they didn't hear me say it, but like our homepage does not look the same for everybody that comes to it. Like it is customized off of your consumption of content, and we're not going to prioritize an article at the top of our homepage that like, Dave, we know you've already read. We're giving you something new. And like that's a customization that we're able to do with audience data and audience intelligence. And so like I'm trying to be very distinct about those 3 buckets. But if we're going to talk about trends as it relates talking shop in the housing industry, I think economic data is the thing that I am watching closer than I ever have in my career, and including like parts of the GFC. And I'm watching it through a different lens too. I've never found myself in a situation. I think a lot of like other investors and operators, particularly around the housing ecosystem, will share this vantage point. I've never found myself cheering for a bad jobs report before. And like we're looking at data through a completely different lens, and the fact that like we need to see some economic deterioration so Jerome Powell and the Federal Reserve will take their foot off of the interest rate gas pedal for a little bit.
Yeah, it's interesting that you broke it down the way you do. And it's funny how everybody, given the entrepreneur that you are and the space you are, it makes sense that you would do that. Since a lot of the audience, you guys are loan officers, I feel like part of my role as the Chief Innovation Officer of MortgageCoach and Sales Boomerang, it's to help you guys develop best practices that will give you a competitive advantage in the market. And I would push you guys I think the economic data is right. And for a long time, loan officers have been tracking the economic data and how do I interpret what's happening in the market and be that loan officer that can help you manage, your lock-in decision, or help you manage, is now the time to buy, time to rent, time to move up. So I definitely think, macroeconomic content is super important, but here's what I think are the two most important buckets for mortgage professionals. And one of those is just really helping people localize. It's one of the things I love about the acquisition you made is you not only have this macroeconomic national content, but you're helping loan officers be local experts. And that's something that at Mortgage Coach, we've always taken a lot of focus, a lot of strategic intent around being that hyper local, hyper personal mortgage professional. That's why it's like, even when it comes to creating that total cost analysis, make sure you ask the customer, hey, what do you think interest rates are going to do? There's what the economists think, there's what the forecasters think, but like, what do you as the family think? And what do you think is going to happen with appreciation rate in your local market? And so I love the fact that you're going local. And by the way, I'm going to call that out as, opportunity number one is data. But I really want to call out second opportunity is being that hyper local expert. And we could unpack that. I mean, we could spend the whole time on just what does that mean to be a hyper local expert. But what are your thoughts on that?
I mean, you've been preaching to the choir for years on like the power of local. And I talked about like how I view data from my vantage point, but I can go through each of these and apply it to the mortgage origination world. And the talking about, I think of local as like kind of being a layer deeper in that economic data. And but you have to understand what's happening at the national level to be able to like properly talk about what's happening at the local level, because what I believe like most consumers, home buyers, home sellers are reading are most often national headlines, and
Right.
understanding the differentiation between what's happening at a national level and a local level is where the advisor comes into play and really brings context to the situation. And it's hard for me to do in this context, Dave, because like we're here talking to a national audience, but like everybody on this call that's based in Phoenix or Nashville or Miami knows that their metrics are not moving in the same direction or at the same pace as what's happening at the national level. So like I would take like the emphasis on local and take it like one step further and say, understanding the difference between what like your audience, AKA borrower or home seller, thinks and what's actually happening in your zip code is like where the value is really created.
Yeah, no, you couldn't be more right on that. So I want to, and I don't want to pivot off of local yet, but I do want to show my screen real quick because we recently, well, a couple of days ago, released, the top 10 Mortgage Coach videos and the top 5 megatrends. And the way I figured out these, well, the way I came up with these megatrends is I really studied the top 10 videos that I did. And I also decided to add 10 more. I kind of called out the top 20. And then I said, you know what? Which one of these interviews were producers that did over 100 million in volume? And then what were some commonalities? What were some common themes that came out of those? And one of them was this real world redefined concept. I feel like so far we've talked a lot about being a data-driven, the data-driven advice era, which I'm going to talk about all year long, and turning databases into data banks. I'll be talking about that. But I want to talk about these two right now: real world redefined and expanding marketplaces. So just to hear my backstory, and I want to get your thoughts on it. So I started thinking about this after watching the interview of Joe Rogan and Mark Zuckerberg, and Zuckerberg said something to the effect, and I'm just going to paraphrase, I'm not going to try to quote him, but like since COVID, the real world has been redefined. Pre-COVID, the real world was like physical, like in person. And he's like, now that COVID's happened, and grandparents love Zoom, we live on Zoom, like you can't even remember at the end of the day who you saw in person in the physical world, who are you on Zoom with, who you texted back and forth with. Like, cash is practically gone, at least for me. I don't wear cash. I don't have cash on my body. I keep some hidden somewhere in my car. I keep some in my backpack. But like the real world has been redefined.
I got $9. $9. It's Dallas. We like valet everywhere we go.
Yeah, you're in Dallas. I Venmo people, and my wife carries cash, but I'll go to the valet. Hey, you got Venmo? And, I'll tip with Venmo all the time at hotels and so on. But anyways, what are your thoughts about that and how the real world is? It's no longer what it used to be. I mean, it is a blend of digital and physical.
Yeah, I think you're spot on with the blend. I mean, even our relationship today, that you and I have communicated on text, social, and Zoom, and there's probably an email in my inbox that I haven't seen yet. And the relationships are blended, but it takes a whole new level of like mental bandwidth to remember like where are we talking again? Was that like DM or IM or whatever? So the blend isn't just like, it's not just a funny nuance in talking about grandparents. It's also changes the way that business is done. And we often talk about it through the lens of the marketing funnel and the lens of the sales funnel, and talking about where relationships begin and then where they transition. Dave, I just got like the biggest distraction ever, and the folks that are listening on YouTube can see my daughter just joined me in the screen here. So
How you doing? Hi.
Years ago, Tom Ferry influenced me with a trampoline in the office, and that's a major distraction when you have a 6-year-old working with you on our quasi bring your daughter to work day here. So
yeah, I love that trampoline backstage at your annual conference. Which,
yeah,
by the way, everyone, make sure you do not miss Mortgage Coach Community. The events that Housing Wire puts on are just incredible.
Yeah, we appreciate it. So I'll try to bring my my attention back to the camera. 1 second. Claire, can I have a second, sweetie? Here, go color. I won't be that awkward newscaster who like tries to shove his daughter out of the room. But thank you, Claire. So bringing it back, Dave, and the blend of real world or however we define real world, but like in person and digital, it certainly evolves the way that we think about relationships with our audience and our clients. And like, where do you introduce to somebody, which is usually the digital world first, and like, how do you take that relationship a layer deeper? And then do you meet in person at a conference or in the office or at a mastermind or a round table at some point? And then ultimately, like, when can we like start doing business together? When can we do a mortgage or become a subscriber? And we think that it's not it's not a direct line, like where you go from like digital world to in person, and that's the culmination. It's like it's a circle where you go like we talk digitally, we talk in person, we talk digitally, we talk in person, and like the relationships build through that cycle. And I think that's something that's playing out in a really big way right now in the mortgage and real estate world. We're seeing some of our like top producers in the Real Trends rankings programs, some of them running very traditional like real estate brokerages with a like strong retail and local market presence, and others, people that are growing really quickly on the back of really strong digital and social media strategies where they may never meet their client in person.
Yeah, well, I think this is a big story, and I want to tell a couple stories around it. Anyone watching this in YouTube, I'll put a link down below. This is a post that I did 3 days ago, and I've had multiple C-suite executives tell me everything from, one of the things I'm losing sleep over, as the leader of a distributed retail platform it's redefining the brick and mortar. And so you're seeing, distributed retail create more like WeWork spaces, reduce their branches and reduce that. One of the other key trends that I called out in the article is I can't believe how many top producers I've talked to and I run into that, like they're market leaders in one city and they moved to another city and no one even knows it. I interviewed a $200 million producer, I thought, out of Denver. She's, been a Denver leader forever. And I found out she lives in Newport Beach and she's still maintained 95% of her business in Denver and she's got a new market. So I just think this, one of my opportunities that I want to throw out there for everyone is the real world's been redefined and that has created market expansion. Just owning a Tesla. I talked to a top producer that has a Tesla, got the self-driving feature. Of course, he keeps his hands on the steering wheel, but he's driving an extra hour to meet with realtors. He's redefined his market instead of like a half-hour drive to a 2-hour drive because he got himself a Tesla and 2 hours is no big deal. So what are your thoughts on all that?
It like reminds me of like one of the things that's changed in the way I build relationships. And there was a point where I had a whiteboard in my office and I'd put like New York, Orange County, Atlanta, Charlotte. And if I was talking to someone who was in those markets, I needed some way to remember that, hey, next time I'm there, I need to like get in touch with this person. Or I was postponing meetings like, hey, I think I'm going to be in Atlanta in April. Let's get together when I'm there. Now, Dave, we do this. Like we get on video and we talk and the relationships grow faster. And eventually, you do get on a plane and travel and meet with somebody, or you do get in your Tesla and drive an hour to meet with a potential home buyer. But the speed at which you can start developing relationships by jumping on video is, it's great. It's not like we're like reinventing the telephone here. Telephone still exists, but like this is definitely a level up in how some business relationships need to evolve in a higher quality format than like phone and text.
So what are some other, no one's got a bigger view of, lenders, realtors, you've got a big view. What are some of the biggest opportunities you think housing has this year?
Yeah. So we were, chatting in advance. And when I think of like the 3 biggest things that I'm watching this year, we talked about data. Number 2 and number 3 aren't necessarily like a positive lens at face value, but like we're going to work together here to find like the opportunity inside of these. So the other, like the next big thing on my list is thinking about cyclical strategy and embracing the fact that as we operate in this, not even arguably, but the largest sector in the US economy, housing, it is a sector that has proven to have cycles and sometimes, and most recently, pretty violent cycles where interest rates move quickly and that has an impact on volumes. And I'm thinking a lot and talking to a lot of leaders about that have operated through many cycles. And we were on stage at the Gathering of Eagles this summer for Real Trends. And we asked everyone in the room to like raise their hand if they've operated through one cycle. Raise their hand if operated 2, 3, 4. And like we have leaders in this industry who have been through 7 or 8 like serious like market capitulations or cycles. And there's a lot to be learned there. And I'm trying to bring some of that knowledge that operators and originators who have been operating through cycles since before the S&L crisis, of what they've learned and how they've learned to grow their businesses or sustain their businesses during down periods. And I think that's like kind of one of the most fascinating and powerful dynamics in business is knowing how to grow through down markets and knowing how to improve your skills and uncover market opportunities when many other people, not everyone, but many other people are putting their head in the sand or even exiting the industry.
Yeah. So before I have 2 more topics. So one, I just want to make sure, guys, I show an insight so we could just make it real clear. Like housing is not only the largest industry in America, it's the largest industry globally. Residential real estate, so I mean, and when you look at the line item of housing, there's nothing else that's been number one for 5 generations. I mean, 5 generations, housing is the single largest line item on anybody's, budget. There's other line items that have gone up. Transportation was down here, it's gone up. Housing has gone down in terms of a line item, but housing is there. So guys, we're in a really important industry. One thing that's on my mind, Clayton, and I would love to know if you guys have the data and the numbers on this, but there were like 4 trillion in mortgage debt done in 2000 and 2021, and rates were in the 2s and 3s. So I've been analyzing that data, and I'm pretty sure it's like over 60% of mortgages start with a 2 or 3. Do you guys have that data? Do you know what the numbers are?
Logan Motoshami's covered that a few times in some of his recent articles. I'm not armed with it right now. I think the last stat he shared is that it was a majority, like over 50% of loans were beneath 4%. It's not beneath 3. That was kind of a small percentage that actually are locked in with a 2 handle on the front. But a majority of loans are locked beneath 4, which is that's the crux of his interest rate lockdown theory.
I'm going to get with Logan, and guys, stay tuned. I think from some of the data that I have, that it's over, that have a 3. I agreed that there's not a huge number that start with a 2, but under 4 is more than 50%. But Logan and I will sync up on that, and I'll bet you Logan will have more articles on that, because I do think it's going to be a hot topic this year. Because I think as an industry, both in housing, we're going to need to get really good at educating families around, oh, maybe you should rent out your home, because they're going to look at that rate as an asset and still move up. Or you know what? It's worth selling your home and still moving up. I mean, at MortgageCoach and Sales Boomerang, that's something that we're obsessed with. Like, how can we help the housing industry identify the consumers that it still makes sense to move up when it comes to achieving financial freedom, even though they've got a 2, 3, or a low 4 on their mortgage. So any other thoughts on that being one of the, it's an opportunity and a challenge?
Yeah, I mean, a lot, like, it's housing decisions should not just be made off of interest rate. We know they're not. Like, we know that families grow and jobs are relocated and needs change. The people that are locked in the low 2s or in the low 3 or high 2s or low 3s have also, just due to the nature of timing of when those loans were locked, have seen significant home price appreciation. We'll see what happens to home prices in 2023, but that's another dynamic that has to be taken into account. How much equity are these borrowers or homeowners sitting on who might be sitting on a 3.1% 30-year fixed rate mortgage? And how could that enable some of the goals they have for themselves and their family? So you use the term advisor all the time, and it becomes increasingly important to be the advisor when markets change quickly, and they've changed quickly.
So I want to be precious with your time, and I think we've already gone over a little bit. Clayton, I could talk shop with you forever. From the first time we met, we connected and just have similar values, similar passion around what housing can do and how we can really serve the industry. But what are some closing thoughts? And I'd love for you to give this to executives. Like, if you had some closing thoughts to anyone who's in a either a decision-making role at a mortgage company or just responsible for the success of their loan officers. Any Clayton Collins closing advice?
Yeah, the last big topic I've been thinking about is employment in the housing industry, and there's a few different layers of that through an executive lens and the originator lens. So, like, we're in a scenario where there is headcount reduction happening in the industry. And it's happened primarily in kind of cost center or operations roles. We are seeing like lower producing loan originators, not having a seat at the table anymore. And I think we're fortunate in this mortgage coach community to be working with some of the top producing originators in the country who are still highly coveted. So, like, the shifts that are happening that we're seeing on the employment front is there's still a lot of competition for the best originators, because the best originators bring in revenue. It doesn't matter what is happening in the market. There's still a battle. There's always a battle for the best origination talent. So like, hey, let's all be better and let's be coveted and let's be chased for the best opportunities. And then there's also some shifts happening in like kind of broader employment market. So earlier this week, we saw a proposal from the FTC to ban non-compete agreements, which is something that will have like reverberations in the housing industry. So like as an executive, yeah, I'm thinking a lot about like what the labor market looks like in 2023 and how that differs from 2022. Will there be a market where non-competes have a whole different like kind of meaning or legality in the market? We were in a market last year or in 2021 where labor was extremely tight, and in 2022 where it wasn't. Like, so where are you emphasizing your recruiting efforts in 2023, and how competitive are you willing to be on compensation in a market where margin is a little bit tighter? So, I'm thinking a lot about the employment trends in the industry, and if there are fewer real estate agents and fewer loan originators, is that a bad thing? I don't know. Like, does it create opportunity for like the cream of the crop to rise and really increase their market share? In the real estate agent and team world, we've been watching this and studying it very closely for several years with Real Trends. And every year for the last 5 years, we've seen the top 1.5% of teams and top 1.5% of agents increase their market share significantly. So like in 2021, the average like top team did 600 sides, and this year the data is showing 850 sides. And yeah, there's some like market growth there, but ultimately we're seeing a larger percent of market share being sucked up by top performers. And that's a trend you got to watch, and it could really impact the attractiveness of like the passerby originator or the passerby real estate agent who, like, I don't care to call them that in this environment, because I know the people that are listening are the true mortgage professionals who are in this industry year in, year out, market cycle in, market cycle out. But it's definitely going to like impact the way that business is done, as we see potentially kind of increased concentration of origination and sales, and hopefully even more reward for the top producers.
Yeah, no, that's a really, really good point. I'm glad you called that out, because that is a trend I've called out a few times it's been happening over the past couple of years, and it is accelerating. I think like the Pareto concept of the 80-20 rule is like old school. It's becoming the 10-90 rule. One of my podcasts today is with Dave Childers, the president of Keeping Current Matters. By the way, he said amazing things about Mike and Altus. They use that research all the time. And check this out. This was like a slide that he shared today, and it was I was asking him, where are things going this year? Give us the economic, and this is what Fannie is saying on home sales, Freddie, MBA, NAR. The average is 5.1, but let's put that in context. When you put it in context historically, obviously it's not the lowest it's ever been, but what is it? But when you're talking about a data-driven mortgage advisor that has good leadership skills, and you're talking about mortgage companies, there's a lot of loans out there. There's a lot of purchase business out there. There's plenty of business to crush it. Dave called out, like this is the forecast for 2023, just putting it in context, guys. Last year was rough. This year's going to be even rougher. But he also called out this quote from David Stevens, and I'm sure you've had David quoted many times in Housing Wire. I'm not going to read this out loud, guys, but I would just, like, my closing thought to everyone listening in is read this, memorize it, come up with your own version of it, localize it and personalize it. But this is the North Star for this year. You really need to be an educator and advisor to help make the case for first-time home buyers. We didn't even talk about that. You know, that could easily be one of our top 3 trends and opportunities of the year is first-time home buyers. We could have spent this whole podcast on that.
Yep.
Just, I think everybody talks about it enough that I didn't put it in my top 3. But you know, you need to kill it with first-time home buyers, and then you need to kill it with move-up buyers, like real estate agents and mortgage professionals. If you can't have a really valuable conversation that's data-driven, and by the way, I don't know how you can do that in a best practice way without Altos research. So Mortgage Coach community, check it out. You know, you cannot have a localized, personalized conversation and not be following Mike Simpson.
Simon, yeah.
Yeah, I gotta get used to saying that name. It's not a name. I've never known anyone with that name before. But if you're not following Mike, he's got a killer YouTube channel, which I personally thought was pretty cool, that he's really made YouTube valuable. And if you're not learning about that product, you're blowing it. And if you're not following Housing Wire, you know, you're not following the best media company in housing. Again, you can't be a data-driven mortgage advisor without it. So Clayton, I'm not going to add on truly any closing thoughts from you before we just wrap this up.
Man, this is one of the things I've learned from you, and I take from you from watching and listening and talking with you. But like, we published an article today on New Year's resolutions, and I like it a little bit, but what I like a lot is that we saw this increased theme of mindset. Like, I am entirely focused on creating my own opportunities and creating my own momentum. And I'm not sitting on the sideline waiting for a tailwind. I'm not sitting around on the sideline till someone tells me rates are 5% and this market's going to turn back on. I'm creating my own opportunities. I'm surrounding myself with people who are creating their own opportunities and building their own momentum. And that's really important to me. And I think it's going to be a differentiator for me and my business and the people around me in 2023 and 2024. And we talked about cyclical strategy, Dave. And I really didn't mean that as like negative. Let's talk about like down cycle. I mean it as like, my foot's on the gas and I'm going to grow through a cycle. And it takes a mindset. It takes being surrounded with the right people to do that. And so that's my parting thought.
Well, I wasn't going to add anything else, but you just had to do that. And in my interview with Michael, you couldn't have picked a better partner. When I was prepping for the interview, I found it's like a TED talk called Hacking Happiness. And so you clearly have a partner that knows data, and he also knows how to be positive, how to be happy. That was the close of our interview today, where I spent 5 minutes and I told people, you guys, you got to go watch this TED talk. If you're watching this, guys, I will put a link down below. And he talks about hacking happiness and how important it is to have a great attitude in this market, because it's going to be a lot easier to have a bad attitude in this market. And by the way, I've already had multiple text messages from people that say, Dave, I watched it. It was amazing. Thank you so much. So that was a great closing thought, brother. And congratulations on having a new partner and an expanded business opportunity and having the best local data in the marketplace. Congrats.
I appreciate it. And my one other New Year's resolution is spend a little more time with this one on the trampoline down here. So
I love it.
I hope we all can keep the right mindset and also prioritize family and the folks that are most important.
All right. Well, hey, thank you, brother. Appreciate you. Take care, everybody. Clayton Collins, you the man. Look forward to seeing you in the physical world. And this is a wrap, everybody.